Alrighty, what is going on, everybody? Welcome back to another video breakdown. In today's video, we're going to be touching on the fundamental backdrop. So first, starting here with what to pay attention to this upcoming week ahead. We'll go over XRP's price in the first portion, Canton, total cryptocurrency market cap, give a quick update. Then I want to play some video clips from this gentleman here, Marcus Enfinger, Ripple, April 19th, 2026. I got to change the date for you guys before I send it out here. Boom. Right. So I'll give you guys this update in the chat. I didn't send it out yet because, of course, when market opens during Asia session this evening, my time, I'm definitely going to probably need to add something to this depending on how the headlines come out. If not, then I'll send it out later this afternoon and everything will just be kind of reiterated on here. Heading into the weekend, the crypto market saw a modest pullback after a strong stretch of optimism driven by growing expectations of a lasting peace between the United States and Iran. That optimism began to unwind as geopolitical developments quickly shifted. Iranian officials reversed earlier signals about reopening the Strait of Hormuz after the U.S. refused to lift its blockade on Iranian ports. This immediately reintroduced uncertainty into the global markets, reminding participants how fragile sentiment remains in a headline-driven environment. As we move into the new week, the macro landscape is once again being dictated by a mix of geopolitical tensions, central bank expectations, and key economic data. On the geopolitical front, messaging has been highly inconsistent. Iran's parliament speaker, Mohammed, I'm not going to butcher this dude's name, suggested that progress is being made in negotiations, but emphasized that there is still a significant gap to close. At the same time, President Donald Trump issued a sharply aggressive statement over the weekend accusing Iran of violating the ceasefire conditions in the Strait of Hormuz, claiming that shots were fired at international vessels and warning of severe U.S. retaliation if an agreement is not reached. So again, this week, right, what do we need to be mindful of as day traders trading NASDAQ or day trading crypto or even just as investors, the volatility that any of these headlines and the updates could have impacting market fluctuations. This contrast between diplomatic progress and escalating rhetoric is exactly the kind of environment that fuels volatility across risk assets. Here's that announcement from Trump. If you guys did not see it, came out today, April 19th at 7:10 a.m. The latest developments suggest that negotiations are continuing with the U.S. officials, including Vice President J.D. Vance, expected to meet Iranian delegates in Pakistan early on this week. So again, another thing I'm highlighting that we need to be mindful of. Any announcements that come from this meeting, good or bad. Iranian sources have indicated that a ceasefire extension could be announced shortly after these talks. However, the situation around the Strait of Hormuz remains critical. The effective closure of this key shipping route has already disrupted global oil flows, tightening supply and increasing pressure on energy prices. U.S. officials have even warned that gasoline prices may remain elevated into the next year if disruptions persist. This dynamic is crucial because energy-driven inflation directly feeds into central bank policy expectations. Going into the week, there are three primary scenarios that I'm personally paying attention to. First, if negotiations break down and conflict escalates, I personally expect a clear shift back towards a risk-off behavior, considering the recent pump that we've seen in global risk assets. Strength in the US dollar, pressure on equities, crypto, strength in safe haven assets via flight to safety. The second scenario that I'm going to be mindful of is if negotiations progress positively and ceasefire extensions are confirmed, risk assets could continue to push higher on renewed optimism. However, the third scenario and the most nuanced scenario that I'm paying attention to this week is the one where traders must be most aware of. And this is the possibility that optimism, especially in risk assets like S&P 500 and NASDAQ, has already been priced in. Markets have rallied aggressively over the past couple of weeks, with futures pushing towards all-time highs, meaning that even positive headlines could trigger a sell the news event. So make sure that if expectations have already peaked and been priced in, we don't get too super excited continuing to chase the bullish headlines, right? Be very mindful of structure this week. Be very mindful of how, the markets react to these headlines that we're going to see. Just, again, don't marry a bias and be adaptive. Beyond geopolitics, monetary policy will play a major role in shaping market direction. All eyes will be on the Federal Reserve Chair nominee, Kevin Warsh, as he testifies before Congress, which we talked about Friday during our market close Zoom call. Markets previously leaned towards expecting a more hawkish stance from Fed Warsh, so any comments around the Fed's balance sheet, inflation outlook, or long-term policy direction will be critical. If his tone reinforces tighter financial conditions or prolonged higher rates that could cap upside in risk assets. On the other hand, any kind of flexibility or acknowledgement of willingness to ease monetary policy could support the current bullish structure. Economic data this week will further influence how markets price future rate decisions. On the U.S. front, we have U.S. retail sales, which are expected to rise by 1.3%, marking the strongest increase in a year and reinforcing the narrative of resilient consumer demand. At the same time, flash PMI data will provide insights into how different sectors of the economy are reacting to geopolitical stress, particularly the divergence between manufacturing and services. Additional data points such as pending home sales and business inventories will help round out the broader economic picture. And of course, we will get more labor market data with the unemployment claims. This week, we will see the week finish off with consumer sentiment and inflation expectations. Expectations, right? So be mindful, huge data week ahead. Very important key insights to be mindful of. We got Iran headlines, Fed policy decision, Fed speaker headlines, testimony from Fed Warsh. We got scheduled US data. And then, of course, lingering in the background, we always have to throw in the mix the Bank of Japan monetary policy. We have to throw in the mix tariff updates. And we also have to throw in the mix any Greenland geopolitical debacles that might unfold in the form of headlines. All right. So all of those things will be our key focus this week. For us as futures traders, we also have corporate earnings. Major companies including Tesla, which will be a big one, Intel, GE Aerospace, United Health Group, American Express, Procter & Gamble, and Lam Research will be reporting this week. These results will give any additional insights into corporate resilience amid rising input costs and geopolitical uncertainty, which in turn does feed back into broader risk sentiment. On the crypto front, from a market structure standpoint, crypto is currently trading at around 2.53 trillion after rejecting the near $2.6 trillion level, which we had discussed in previous video breakdowns from months ago. So that level and that update has now been achieved. This level still remains a key psychological structural barrier. A confirmed break above 2.6 trillion would likely open the door towards the next major upside hurdles at 2.89 to $3 trillion, aligning with areas where sellers may begin to re-engage. On the downside, any resurgence with the geopolitical backdrop, creating a risk-off sentiment, whether driven by, hawkish policy or geopolitical escalation, could bring the market back down to $2.3 trillion before we reassess the situation. In summary, this is a market that remains highly reactive and forward-looking. As traders, we need to stay focused on real-time geopolitical developments, particularly updates from the Pakistan negotiations in the coming days, any changes in the status of the Strait of Hormuz, and at the same time monitoring central bank tones, especially from Warsh this week, and key economic data releases as well, will be essential in understanding how rate expectations evolve. Most importantly, we need to remain aware of positioning and sentiment. In a market that is already priced in significant optimism, the reaction to news often matters more than the news itself. So be mindful of that this week. Okay? Outside of that, that is the quick fundamental backdrop for this week. I'll make updates if need be as we roll over into Asia session. This was a very interesting report. I will drop in the fundamental chat for you guys April 18th. So it came out yesterday and it's titled Federal Reserve, a Battle is Brewing. I'm not going to read the entire thing for you guys, but just to give you a gist of kind of what it's about, I'll read a couple paragraphs. And it says, Wall Street celebrated record highs last week, but it may be overlooking one of the most consequential risks building in plain sight. The possibility that within a month, the United States could have a Federal Reserve with no clear accepted leader. So before I even read the remaining portions of this, can somebody that has been a part of this community tell me what key vocabulary word that we know risk assets don't like would this likely create? Can someone tell me?
Uncertainty.
Uncertainty, right? Great job, multiverse, bro. Beautiful, right? Phenomenal. That means you're paying attention. That is so great to see because that's exactly what a scenario like this would create. Now, that does not mean that the uncertainty will bring risk-off conditions, depending on how bad it is, of course, is what we'll need to take into accountability. But nonetheless, we know that if the Fed is operating in an uncertain environment where market is unable to price in if Jerome Powell's going to be chair, if somebody's going to temporarily replace him, if he gets fired. This report talks about him getting fired still, and how, Fed Warsh might not get voted in when all of this happens. So that would just be like a whole conglomerate of a bunch of just up and down bullshit jargon. Okay, so just be mindful. I will drop this in the chat. It's a great read. I highly just suggest you guys go over it on your free time because it talks about that scenario unfolding and just the possibilities and outcomes. All right, so I wanted to throw that to you guys as well. First, starting off with the total cryptocurrency market cap, as we had discussed in the report. On the higher time frame, right now we have tapped into the $2.6 trillion threshold, where we had mentioned that we are likely to meet some resistance, as there was an aggressive seller that existed here in previous months that was able to break support, trap buyers at 2.6, and push price down to 2.05. You can see that sellers are, as of time of recording, throwing up a passive defense, not allowing buyers to propel themselves or aggressively break above 2.6 for now. We are still trading above the triple moving average. We are also trading above a triple moving average EMA on the 12-hour plus, and we have also respected a delta held pattern at the $2.3 trillion mark, which was our last major push from A to B. With that being said, I'm still bullish as long as we are above 2.3 trillion. I do firmly believe that a healthy correction is in play, as that is just normal market structure for price to push higher. So for now, as long as price is trading above the EMA, I will not be concerned. Where even if we were to see a trickle back down into the EMA before buyers started to reassess, sentiment flip back bullish, that could be a scenario that we see. We could also see a restalling from where we're at now, buyers become aggressive and push back above 2.6. If these two scenarios do not happen, that will be a case for concern. If we break this low, that's going to mean that sellers were aggressive enough to push price below the EMAs. That was likely going to open the door for a revisitation immediately of 2.3 trillion. From $2.3 trillion, if we retouch that level, the question will be, do we see sellers pick up aggression from this level, or do we see buyers defend where they had previously bought from, turn 2.3 back into support, and become aggressive enough to push higher? If we do not, these are the only three bullish scenarios that I will be mindful of. If at any point in time we start creating bearish price action before $2.3 trillion, or excuse me, underneath of $2.3 trillion, that is going to open the door for a immediate visitation of 2.2 to 2.5 trillion. Same thing, because again, I can be both pessimistic and optimism at times. I'm still expecting personally, until sentiment completely shifts and we regain control of $3 trillion, where we had this massive amount of consolidation, distribution, and a huge leg to the downside, I'm still open to the idea of prices going lower. I don't know why, but I just have a feeling that these mother truckers have it in their sleeve to drop prices one last time. I can't put my finger on what that catalyst might be, but I'm still being cautious and protecting and preserving capital in case of that event. So with that being said, those targets to the downside still remain 2.05 and 1.84 if we break $2.3 trillion. Right? So total market cap out of the way. XRP, same thing. XRP's liquidity has been pretty dry outside of the last week, where it had a 16% rally from a roughly around $1.27 to $1.50, delta to delta, dark pool to dark pool. Cannot get any more accurate than this in this community. It's literally insane how many XRP members out there will just watch the bullish stuff and not pay attention to the accuracy. So we've traded back down into the $1.43 dark pool, where you can see prices sort of lingering around. We're seeing, obviously, of course, a battle between buyers and sellers at this level. That's what creates consolidation or indecisiveness in the market. We need to see if one or the other traps and which one becomes aggressive. With that being said, bullish scenario first. Same thing like in the total market cap. If we can see price remain above $1.34, I still remain bullish on XRP. As higher time frame, that would just be a healthy correction from this previous A to B move. Second scenario would be a retest at around $1.38 or the 50 EMA, break back above $1.43, and continuation in the bullish momentum. Last scenario would just be consolidation where we're currently trading at and a bullish uptick from here. If at any point in time $1.34 is broken, that's going to open the door for a revisitation of a deeper correction down into this base at $1.27. Same targets still stand. Anything under $1.27, we have $1.18 and $1.11, where we could possibly see passive buyers defend. Worst case scenario right now on my radar, that dollar 91 cent threshold is looking extremely appetizing considering the market landscape. I will definitely be buying some XRP if we can drop beneath $1 and tap that 91 cent dark pool, as we're likely to see some buyers step in there. Nonetheless, levels haven't changed, but they have been extremely accurate. So if you guys are dollar cost averagers, I would definitely consider using these levels, not buying into the hypes and the rallies, and buying when price comes into these dark pools and deltas. Canton. Canton's been a pretty boring story outside of the recent uptick that we saw up until roughly around 17.5 cents as buyers made an attempt to become aggressive above the 14,801 dark pool. But how crazy is it that we had an attempt by buyers at the 14,801? They made an attempt to push up into the dark pool at the 18,194, failed, lost steam, sentiment flipped, and then we retraced and came straight back into 14,801 to the T. And now we're just kind of consolidating at and around this dark pool. So same thing, question remains, can we see buyers trap sellers become aggressive enough to hold this as support and make another leg higher, pushing past all of the passive sellers that are likely just sitting here where we can clearly see sellers aggressively broke previous support. Then buyers continued to try to defend, become aggressive and push price higher, and sellers just constantly kept trapping them at around 17 to 17.5 cents. Following that, that was the level that then took us down into the dark pool, where sellers again showed their hand. Buyers absorbed those sellers here, shifted structure, and since this shift in structure, we have held above not only the 12,275, but now also at the 14,801 since this shift in momentum here. So that means right now, this is the last base where buyers could defend this current range that we're in, where buyers have tried to regain control of price. So right now, 13.5 cents remains our oh shit handle. If 13.5 cents breaks, expect lower prices. Price above 13.5 cents, buyers could defend at any one of these levels. Right? If we do break 13.5 cents, I will be looking to get into some Canton at 12,275 as my first bearish target. And of course, that 0.9453 would give us the best discounted opportunity, correcting more of this bullish extension. Out of the table right now, but still a possibility in the coming days ahead, depending on volatility and market conditions. Outside of that, that is the total crypto market XRP Canton update.